The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 24th day of September. This week wraps up September as a candle for the monthly chart. So let's just go through this step by step. The Dow's down 176 at 26,567. I like those numbers, 26567. What's really important about this particular move today, and I pointed it out to my subscribers to my opening call, is that we've got a doji candle high after the 26,769 high of Friday, closed almost at the opening price. And it's very important, if there's a close below, sharply lower than the low of Friday of 26,680, there's a good chance that we've made at least a peak D top that could pull back more kind of sideways to give back that little extension of the gap. And that means that you've got tremendous support between the high of, was that Friday? Wednesday, high of Wednesday, 26,464, and the low of Thursday, 26,590. So the big question for me, and I actually had it on my Traders Corner, that's for my newsletter, that's the final thing that goes out at 8:35. For bullet point number 1, the diamonds, I was going to go short immediately at the open. Couple of reasons why I didn't. I'm kind of regretting it now, but my idea was there's been so many rotational sector moves in the consolidation that started in the NASDAQ and the Russell 2000 recently, with the Dow fulfilling its upside obligation to get to a leg D and then to make an all-time high, which it did. Plus, you've got the rectangle formation. Here's a template that I drew, and I'd said some time ago that the lowercase h going to a lowercase m would suggest to me that we're going to be stuck in a range between 25,500, and until we break out decisively, there's not a good chance of making that cup formation. Well, it did it so quickly, and it just kept running, and it went to an all-time high of above the 26,616 level back from January the 26th, that it's fulfilled all the obligations. And the reason why I initially wanted to go short was the doji D in the daily and the weekly extension, even though I'm calling it leg F for now, although it could be a Chapman Wave flat base restart, is because in my rule of thumb with this template is that if you, in the rectangle formation, when there's a smaller time frame, in this case we'd be looking at the monthly chart, which is also a U formation, when you look at the weekly chart breaking just above, even though 616 to 769 is 150 points, it isn't all that much when you're looking at percentages and you're at 26,616. So a couple of things. Not only that, there was a pattern that I put in here, which is called the falling axe, and one of my in the original group of people that started to study the Chapman Wave methodology some 12 years ago or so, had mentioned to me, hey, doesn't this look like a stalk leg formation? And on Friday, for some reason, I forgot to talk about it. I think I might have started, then I forgot. Yeah, it does look like it has some characteristics, but the oval pattern, it has to be an oval pattern. You see this here? That is an oval pattern. This one right here has more of a semi-cup to a falling axe, that is a cone, expanding cone formation with lower highs and lower lows. So it's pointing down, and then it turns around and breaks out. So yeah, it has some of the characters. So the next question was, is this possibly a Chapman Wave a propeller shaft, where this becomes, in the daily chart, the move from there to there, that is from 24,954 back on the 15th of August to the high of 26,167 on, I think it was about the 27th of August, and then a pullback to 25,754. Is that really like a propeller shaft? Well, in a way, yes. Let me show you why. This is like a technical Friday, but there have been a lot of questions, so I thought I'd just deal with them. Why not? That's what we're here for, education. Yeah, it does look like a propeller shaft. And what I had done was I'd drawn in this here with my very detailed work. There it is. So here's the daily chart. And I drew, and you can see there's the dashed line. I forgot to mention it Friday. I apologize. So yeah, I've got that dashed line right there. Okay, you see it now? Right there. And then from the low that was made, and extends. And what does it do? It extends to about 26,934. And then there are a whole bunch of other things that I don't want to deal with right now. I'll talk about it, and I'll show subscribers later in the week. I want you to see that our transition to a new format works smoothly. I think it's kind of working smoothly. Let me know if it isn't. And I will, by maybe Wednesday, I'll do something more with the very long-term chart that I wanted to show. It's this one here. Oh, man, am I going to remember which one it is? I think it's this. I'm going to give it a guess. Yes. So here it is. Going from the low of 1987, 1616 was the Dow. No, that's not the S&P at 1616, or the YM, the Russell. No, this is the Dow after the major decline, and October the 19th of 1987. If I take the low and I draw it and I go right to the highs that were made at peak D and E back in 1999 and 2000, it continues. And where does it go to? It hits exactly, pretty much exactly, when you're considering the amount of time, 87 to 2019, sorry, 18. No, that's a long time. So if you look at that, you'll see that the patterns forming, and this is another reason why I was hoping, can't regret it now, it's too late. I should have just stayed with that, wanting to short the Dow right at the opening. I didn't do it. There were a couple of reasons, but the most important was I needed to see how it played out, because look how many D to E's or E to F's made this V-shaped pattern with a slightly higher high in the monthly, and then there was a sharp fall. So I don't see a reason yet for a sharp fall, and that's the reason why I didn't want to get too carried away. If you look at the 120-minute chart, well, first of all, the daily made that doji high at peak D at 26,769. That was a Chapman wave 5. Now we're on our way down, but I'm not sure that the down, there should be a lot of support based on the MACD just turning down right now, and the stochastic still at 84%. So I'm looking at that. But if you go to the 120-minute chart, look, peak D, Chapman wave 5, pulls back, very sharp pullback in this context, and the stochastic has pulled back quite sharply to 84% after being at 93%. I'm still seeing enough rotation to say there. I'll talk about the rotation when we get back. No need to rush it. And I haven't even gone through all the indices. I wanted to go through this because I wanted to show you that in the context of the market, the whole aspect of rotation is very important, because we might see a rotation now where the Dow is a little bit weak, and all of a sudden you've got the Q's strong. That's rotation. I'll be right back.
Hi, folks. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
I remember back, Dow's down 182. Now we're going to, a new recovery. I don't think there's all that much to the upside in this particular phase right now. And I think the downside is going to be a consolidation going to 26,300s, 26,200s. That should be the big test of what's going to happen. And that, talking about the different patterns, this propeller shaft or this cup formation, breakout, Chapman wave, cup and ladle, usually goes to D, and then it comes back, and then it should try to test as support the breakout, and that breakout will be 26,167 unless, and this, excuse me, unless there is an inflection point that says we've broken above the previous peak D high and closed above it within 3 sessions. So this is session 1. It's got 2 more sessions. If it closes above 26,769, what will happen is there's a high-level consolidation because that weekly chart is just, look how strong it is. Okay, let's get to the S&P. SPX.X, here we go. S&P is 2916, down 13. This has got an alternate count. I'm calling it E for now. I had no reason to change it to say, yep, it could be a leg E/C. I just think right now it needs a little bit of a consolidation. But I can change that. I will not change that PE if it slides under 2910. That'll make it confirmation that it is an E. Stochastic's still at 86%. MACD is good, not great, but good. And that weekly chart also is very strong. So is the monthly in both the Dow and the S&P. Let's go to the parameters to watch. 2903, very important support. A break above 2941, was it? 2940.91 would be quite impressive, actually. We'll see if we can do that in this phase. QQQ, NDX 100, trading vehicle, making an arch formation. It's just had a nice rebound. It's down only 47 cents at 183.25 after hitting a low of 181.30 this morning. What's really important about this is that the weekly chart has gone sideways and is suggesting that this green line at 181.90 is the 9-period exponential moving average in the weekly chart, the green line. Black line is the 14-period moving average at 180.17. My thinking is that's the big deal. A close below 180 in the next 2 weeks would be very negative. Just going sideways says, I'm using up time. I'm using up time, and that's important. And the monthly chart is still good. IWM, the Russell 2000. Oh, any move above 186, besides being really impressive, would say, hey, there's a chance you could test 187.52, the all-time high made August the 30th in the Qs. Now, the IWM is very weak. Pulling back leg E in the daily after making a peak F top at 173.39 on the 31st of August, all-time high. G/C, I'm not changing that right now. I do think it's going to turn out to be a G, but let's call it a G/C. C means there should be a D. G means you could pull back quite sharply from here. And I think that's going to be the case. Monthly chart is still very good. So give you parameters. The close below 168 would really confirm that the daily is in a sell mode and should go even lower. More importantly, it says that that weekly chart has probably made a peak G, and that's going to be it for now in the IWM Russell 2000, down 132 at 169.08. Hey, gold. Now, what's with gold? Gold is up 4.3 at 12.05. Look at this pattern, sideways, up and down like a little yo-yo, but stuck in a range between 12.18 and let's call it 11.93, 11.92. There it is at 12.05, up 4.3. It was up quite a bit higher this morning. It was up at 12.08.8, and now it's down only 3 points from there. But I have to tell you, it's not good action. This weekly chart just keeps going sideways. Now, let's look at the GDX, because you did have ABX amalgamating with Royal Gold. That's ABX, it's American Barrick. And that should have sent some positive shockwaves through the gold sector, with others saying, oh, maybe this will be taken over, maybe that. That should have been a boost. Up 4 cents, GDX. Did it break it? I think by 1 penny. Let's have a look. So the high, 1911 was the high on the 20th. 1911 was the high on today, even with all this great news. Nothing to see here, folks. Not now. Not until it can break into the 19.70s. Then I'm going to be quite impressed. But up until now, this is, the silver. Let me just show you silver. Silver was a little better earlier. Yeah, it's holding better. Silver actually is holding much nicely. This is a much better looking chart. MACD stochastic are rallying in the daily. Price is okay. It's in leg B right now. That was A. Let me just put that in here. A. And now you got your B. All gray. This is gray A, gray B, meaning there's no buy mode yet because the stochastic is only at 46%. And the weekly chart is turning up a little bit. Monthly chart doesn't look good at all. So I'm going to go from there to the dollar. Now look at this. The dollar should have broken down, should have gone under 93.81. It's not great, but it's looking at 94.12. There's a sell mode in the daily. We're still long from 90. It hit 90, almost 97. And now what's really important is that there's a slightly higher high, but I need to see the dollar breaking into the 94.60s, and it needs to do that fairly soon. I'm not sure. I think they both kind of stuck right now, but we're remaining long because the weekly chart has gone through the beak and has held the 200-period moving average of the daily, and it's nicely above the weekly 200-period moving average. Watching it closely, because it's going to be very important. EUR-USD, the euro went to a leg D, pulling back a little bit from the high. MACD's stochastic is good at 84%, and a leg B in the weekly chart. So far, this is nice action in the daily. Not bad in the weekly, lousy action still in the monthly of the euro, and the USD JPY is looking at a leg D is probably a peak D today. Oh, this is going to be so important for the dollar. I still think that weekly chart wants to break above to go to a leg D above the weekly chart of the high of 20th of July, 113.21. I think it's going to get there, but that long-term downtrend line is really important. Okay, we've got a doorbell going. How am I going to handle that? I don't know. So we've done that. Let's get into crude oil. Crude oil right now is up at 72.31, up 1.52. A leg F/B in the daily chart. Fabulous. Fred nailed this. He said a week ago it should rally strongly. Good move. But let's see if it can, like the euro, can it break above the high of the week of the 6th of July, 73.54. Looking very good. Strong action. Very nice. And TLT, before we go to a break, the TLT is down to 13 cents at 116.97. Whew, this is tough. I spent a lot of time over the weekend. I showed my subscribers the TNX. I did a whole study on the TNX, which is the 10-year. And I said, this is really important because it's having a high-level consolidation. But the 5-year, the FVX, is only in leg C, and it still has to get to a D. Look at that. So it could sneak just a couple of ticks above 29.77. Today's high is 29.76. It needs 29.78 to get to leg D. Then I think we get a test of interest rates. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 181. S&P's down 30. Be right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So a couple of quick questions we got. What is SCIF? A question about SCIF. Well, this is the Van Eck Vectors India small cap. Okay. So the question is it getting near a Chapman wave buy setup? So I just grabbed, I haven't looked at it for ages, but I remembered IFN, which is the India fund, and that has had a move, a pretty decent move from the low that was made back in 2016 in the 19s. It went to 28. And now it's back to 22, and it keeps testing the 200-period exponential moving average of 2170s. So that, to me, would be the clue. When this one can try to find a base in the about 70 cents to a point lower, that's when I'd actually start. I wouldn't look at it until it actually forms the base. Even if it bounces off it, it should come back and retest. So I'm going to go back to the SCIF, and say pretty much the same thing. And in this case, it's way below the 200 period moving average, but I would use the low that was made back in November of 2016 at 39.34, and it's trading at 43.04, down $1.06 right now. Gap down for the second time. So 43 down to the 41.40 area. Yep, here as well. I just hold off, and then you see this pattern right here, where in the weekly chart, you've gone from, let's just go, I'll do it quickly, A, B, C, no D, D, E, F. Makes a peak F top once back in around about October of 2016, pulls back sharply to 40, so it goes from about the 49s to the 40 level, then it goes A, B, C, D, E, pulls back, A, B, C, D, and then A, B, C, D, second D, yep, and then makes another D back at 72.57, early in 2018, and now it's at 43, 60%, 50-something percent. This is a big move down. So I would just, I wouldn't be in a rush. The chart formation that I'm looking at here says it needs a little time, but more importantly, it'll need price. So either you could hold off and wait for a really good rally above 48, that's 5 points, it's about 11%. I would just hold off altogether. But what I would say to you is somewhere under that gap of the week of January the 6th, 2017, 41.85. Just in that area, give me a yell. Let's look at it again. I just wouldn't be in a rush. These patterns are pretty pervasive to the downside. Now, a couple of things that I want to look at. Look, the IYT, another reason why I thought, I don't want to just, everything said that I should have gone short again on the Dow, but I wasn't 100% sure when you get, now of course it looks very obvious, but up until yesterday, look, the IYT, the iShares Dow Jones Transportation Average Index Fund, almost broke to a new high, all-time high. 209.33 was the high. Well, just a week before, it had done 209.43. What, big deal, 10 cents? Well, of course, now it's down 3.23 at 1.55. We got 1.55%. Then now it's different. This really looks like it could become a peak E. And therefore, the Dow theory, which basically says you want confirmation of all-time highs with the transportation index, or vice versa, says, hey, everything came together. Now, I know from my old way of looking at the Dow theory, because there were a lot of people that used to talk about Dow theory in the old days, just maybe 20 years ago. And it was a big deal. And it's a big deal because if the transportation index is working well, it means you've got goods and services being traversed, taken from one place to the other, or handled in one way or the other. That is very positive to the economy, right? Okay. So now I'm looking at this and I'm saying, well, the daily is saying, oops, lousy technicals aren't confirming the rally, or did not confirm Friday's rally. So this price moved down as a stochastic at 67% in the MACD, deflected lower instead of just popping to the upside. Weekly charts still very strong, 91% in the stochastic. MACD is good. Monthly charts very strong, but it has gone from an E to an F, and that's another reason why I thought I've got to be. This is going to be a very important period, because if the TLT starts to rally because stocks are falling and money is flowing out, migrating from the equity growth to the volatility that people don't like or fund managers don't like, and then it starts to migrate to the safety of bonds, the whole TLT area, then that would be the clue. and yet the TLT is down 12 cents right here. So money isn't at this point flowing. And that's the thing about the Fed. I think the Fed is stuck. Look, they're looking at the HGX. They're always looking at the housing index. Whoa, down 1% today, down 324 at 294.08. This HGX is, oh, this is a new low in the weekly chart. Oh, this is a new almost a year and a half low. 50, 70, 80 week low or something. Hey, this is not good. And that's what I think the Fed is worried about. They can't really raise, they don't want to raise rates sharply when the housing and all the interest rate sensitive areas are suffering. And yet the economy is strong enough for them to say, hey, it should be an easy 0.25% here and a 0.25% there. Oh, really stuck. They should have just been doing it as if it was a very smooth transition, because you want to have this demand for loans. That's really what it's all about. And so we'll see. Okay. Now, what I looked at over the weekend is, look, if you go to Amazon, Amazon had a really nice turnaround today, plummeting to the 1860s. It's now trading at 1916. Nice candle for a turnaround, but it's not a big, it's just nothing. If tomorrow has instead of an up one day at 1916.07 after being down very sharply, 20, 30 points, it gives back and it's down 20 points again tomorrow, like it was on Friday, sharply lower. So this is something, because I've got that peak E in the weekly. I haven't been able to put a down arrow. I think I will be able to this week. And the monthly chart is in leg E. Amazon is really important. If you don't think Amazon's important, going into the holiday season, we're going to see something very interesting here. If Amazon actually takes on water and starts to dive under the 1800s in the next few weeks, that's going to be telling us a story. So that's Amazon. Look at Goog. Nice turnaround today, up 6, but it went to a lower low, went to an E, and now it's the weekly chart. Technically, it's not that good. Monthly chart is really good in the MACD. Stochastics at 80% with a couple of days to go. Watching this, I've got it as a leg F. Could be an alternate count. This is going to be one important month, September. Why? Because, look, the Qs did not make a new monthly high so far in the whole of September. You thought it would be a cinch just to go to 187.53. It couldn't. It's trading at 183.90. Not a big deal. It's at 2.5 points lower, but it hasn't made it yet. We'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let's look at the XLF. The XLF right now is down huge. It's down 0.30 at 28.43. And what I said to subscribers is I'm highly suspicious of what's going on in the XLF. It did not really participate like it normally did when rates were going high. That was the theme. Rates are great for banks. Well, great. Going from the 30s down to the 26s, running to the 29s, and now having a slump from over 29 to 28.44. I don't like this. I'm very suspicious. It looks to me like the monthly is making a right shoulder pattern. It needs a little time. Would not be surprised if it's really late October, maybe November, when the financials really get going again. Look at Goldman Sachs, a question about Goldman Sachs. The same thing. Goldman Sachs went up to the 200-period moving average of 237 and then bam, pulls back down. Now it's in the 232. I shouldn't say bam. 5 points is not a big deal for a $232 stock. But it is a big deal for the pattern because it's making a weekly U-shaped pattern. And I suspect Goldman will be in the next big phase of the market. But it's going to take time to kind of digest these gains. So Goldman Sachs trading at 232, down 2.5. If you look at the, I was asked about it. Oh, IYR. IYR, remember I spoke about this, is really positive up until it made that peak E-top back in, I think it was August. What was this? Yeah, August the 24th hits 83.62. This is the iShares Dow Jones U.S. Real Estate Index, REITs Index, actually. This is the commercial real estate, gives dividends, etc. Down to 164 at 80.28. This is definitely a down arrow. It says sell signal in the weekly chart, sell mode in the daily. And the monthly chart is still good, but it's kind of stuck. And I would venture to say that 78 is going to be really important support in the monthly chart because 76.65 is the 200-period moving average in the weekly. MACD just turned down. Stochastic turned down. On-balance volume turned down. Relative strength is good, but at 51% or so, it's turning down. I got to watch this. I got to watch it real closely. Now, all right, let's just go. I don't want to do this before we get into the... For my subscribers, I'm going to go into this in much, much greater detail. Actually, I think I did, and I also have a horrible feeling that I blipped it off. I saved it, but I hadn't quite finished. So I have to, I really don't want to have to do that all over again. But anyway, look at this massive thing. It goes to 27,200. It's this trend line, rising trend line. Look at this, a rising wedge. Let me put it this way. It's not quite a wedge, it's really an up channel. Well, I don't want to go into it now because it's really for subscribers. I just want to mention that look at the angle of ascent. You see this channel right here that's gone from the August low of 2015 at 15,300s, and it just, these support levels all held. Now comes the big test. Does it go sideways or does it break down? But if you look, it went EF right over there in 2007, and then had a little bit of a pullback, maybe 52%. But I'm looking at this and I'm saying, I can see a lot of support, but I also have to consider that if I was to do this in the Chapman wave methodology and say, here's my Chapman wave inside track repellent zone, we're in the repellent zone. We just hit, in fact, the start of the repellent zone. So this makes it very important in the monthly chart. Technicals are excellent. Does this become a magnet for more testing up in the 26,900s to 27,200s? And it's a rising trend line every month. It's a little bit higher. Or are we going to break this absolutely key support of 25,200 sometime in the next 2 months? And let's say, oh my goodness, this could go on for a little while longer. Those are the questions I have. So I think that it's actually incumbent upon people to try to find sectors that have not been working and that show some kind of strength right here. And I'm looking at this and I'm saying, well, if that's the case, what do you make of the, here we go, the semiconductors. Semiconductors having a nice green day today, up 45 cents, but having gone below both the 9 and the 14-period exponential moving averages, down to 106.33, trading up $1.30 higher than that right now at 107.62. What is happening here? Is this the rotational sign? That's really my question. Or has the semiconductor sector had such a decent consolidation since the March high of 114.55 that right now it can take its time and try to bump up against that down channel called the Chapman wave inside track repellent zone to see if it can take it out and maybe get into the 109, 110 area, and it's at 107.61. Or is this just one of those rotations? Fund managers say, you know what, we've been down for 2 weeks. Let's see if we can rally for a week or 3 days or 4 days, and then we'll get out of it. So I think the semiconductors are really important. They did have an island reversal. The low that was made when we went to 102 point, it was just off 102, 102.16 on the 12th of September. Is this now a leg B with a C and a D to come on the upside? Or is it just that rotation that says, oh, well, today semiconductors and the Qs helping the Qs, tomorrow they go down and the Dow bounces back? That's the question that I have right now. So most importantly, where are we? We're in a rotational correction at this particular point on the daily charts. The weekly charts have not yet kicked in. Let me go to the New York Stock Exchange to say something very interesting. Look, the New York Stock Exchange right now is down 74 at 13,159. I really didn't know what to call this over the weekend. I looked at it and said, yeah, A, B, C, there's no H, so it can't go from a G to an H. This has to be a C. It looks like it needs to get to a D. So does that tell me that the big, broad New York Stock Exchange index is going to pull back sharply over the next day or two, and then it's going to start another rally going to that leg D, and at that point you finally got it better, but it hasn't gone even close to its all-time high. It's the lagging index. The index itself went on January the 26th to 13,635. Right now it's at 13,159. It did get to 13,200 and something, 261 on Friday. What I can say is, as long as there's a rotation going on, I have to, as I should have been before, and I kept everything very tight and stops, etc. But I should have said there's enough residual strength to say that if there's a rotation, you don't have to smash. Let's face it, over the weekend and then again early this morning, don't tell me there hasn't been enough geopolitical news flashes that should have had the market down Dow's down 171. It should have been down 271. The S&P is down 12. It should be down 22. You can just go on and on. Under these conditions, under other circumstances, this market would have just been clobbered. But it's not. It's holding very well. There is enough buying. The market is saying, we will live through this, folks. Don't stand on the balcony there ready to jump. Everything's just cool. That's what the market's saying. Will it continue to say that? And that's the big question. Look, the VIX is up. I'll be back and we'll talk about the VIX.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So the VIX index trading at 1270 up $1.02 had a big spike. It's right in between the 9 and the 14 period moving average in the daily. If it manages from 1273 to actually push higher and go into the 1320s, and then by Tuesday or Wednesday it's trading in the 1380s, this market is coming down quite sharply. Forget rotation. It's going to come down in unison. I'm looking at this and I'm saying, gee, look at that weekly chart. It's just kind of stuck. Nothing to see here, folks. But the MACD has started to improve. The histogram's improving. So it's giving me a hint. And I said to subscribers last week, I think next week we're probably going to go short. I'll do a lot more work tonight because I needed to see how it all played out today. I mean, look, here you are with the IWM and the Qs and the the Qs and the SMHs running sharply. But wait a minute, this is serious stuff. Question I had here is XAL. Look, the airline index down 290. at 106 made a peak G, unusual peak G, and this is just an arch formation in the weekly. Got to take this seriously, especially with crude oil running so sharply. What about XLP? This is the XLP right now. Is the S&P Select. This is the staples, consumer staples. Yeah, Select Consumer Staples Spider Fund, peak D. Second time it's made a peak D in just a month, and it's pulling back sharply. The weekly chart is arching over, holding quite nicely, but that monthly chart has to be monitored very carefully. It's down 80 cents at 54.22. But wait a minute, the RTH, which is the RTH, there you are, is a retail index. This is something with Amazon I'm keeping my eye on. Why? Peak D in the Chapman wave methodology, second time also like the XLP. So we're looking at the RTH, Market Vectors Retail ETF, leg E in the monthly, good technicals, leg a peak D in the weekly, good technicals but starting to dip lower, that's all, good but dipping a little lower, and the daily technicals very poor. And that says to me, watch this closely. So, handing you over to Steve Rhodes, he'll hand you over to Dave White and Tom O'Brien. Have a great, check out my opening call. We've had some real nice trades. One sector trade has been done very nicely. We've taken some profits from there. We'll see what happens this week, and we'll see what happens today. Have a great day. See you tomorrow, and hope everything went smoothly with that transition. See you tomorrow.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology